And I just want to make a statement again. I know that you guys are waiting for the last two videos. I'm just having an issue with my video editing software, and I'm hopefully going to get it fixed today and get those videos up today. So just be patient with me. But I might just share the Canva link if you guys really just need it right away, because I know some of you guys are waiting on that. And then when it's up on YouTube, I'll reshare it. But yeah, so thank you all for joining us. This week, we are going to be covering other research tools and research tactics. I know we did a lot of covering, FinViz, and I know we do a lot on trading economics, but there's so many different tools out there that are good for different reasons, and I just kind of wanted to go through that with you guys.
Hey, Jeff.
Yep.
Hey, everybody. Hey, Jeff. Yeah, I was just wondering, when you said you were searching for those 500 companies, when you get a chance, just to like show like the presets you're using on FinFiz.
Oh yeah, absolutely. I mean, we could just, since it's kind of on the topic, we could just jump into that real quick, because I think maybe other people in the room might be interested in that. Just how I'm trying to find some shorts. So Alex's question is, prior to some of you guys joining the call, I was having a conversation with Vanessa, and I was telling her how I'm trying to find bad companies in the tech sector. So I want to show you guys what I'm using to screen, and then after that, I'm going to go through the other research tools that we're using. So let's just go to FinViz. So I'm going to screener. So what I'm looking for is, the parameters that I'm using actually aren't anything too crazy. Since I'm actively trading, I want liquidity, right? So I only want stocks that are doing over 2 million in volume. I want stocks that have an average true range over 2. So that pretty much means on any given day, the stock might move $2 on average. So that's good, for a short-term active trader. You want stocks that move. You don't want stocks that are just dead. I can even put 1. I'll come here and click technology. And see, now it comes down to just 82 companies that trades over 2 million shares a day and has an average true range over 1. So I just made it 1 just to make it even, just give us a little more. And then I'm just doing this, right? And I'm trying to find what companies have bad charts. And they all kind of look bad. So I'm also looking for the ones that have a technical pattern that I like. So like this is a good example of one. I really like this setup, but the breakout already happened. But I might keep my eye on AMAT.
So maybe if it goes back up and then use that as resistance, bounces off that.
Yep. Gotcha. And that's what I would be looking out for. That's a good thing that you brought up. Let me actually I want to show you that, because that's actually happened in the NASDAQ. And I wanted to short the NASDAQ futures, and I was trying to be patient, but I think I missed the pullback. And I just want to show you what that pullback look like. Because you see the NASDAQ has the same kind of pattern right here. Let's maybe zoom in. No, it's not the way to zoom in. Interactive. There's a way to make this thing full screen, and I forgot. It's all right. But yeah, if I okay, that's how we can zoom in. So the NASDAQ, let me just draw the trend line. Vertical, boom. So you see this is clear. This is, clear support. It broke through. It pulled back up to here, and then it flushed straight through. So what I wanted was a breakthrough and a pullback into here and a flush. And when it started flushing, I was kind of maybe hoping for like a clean, like maybe consolidation or a pullback into the level, but it had already pulled back above and then flushed straight through. So that's just an like a real-time example of like the kind of trades that I'm looking for. And this is what you would call a breakout trade.
Yeah, I like those too.
Yeah, I like the breakout trades a lot. Let's see if there's anything else interesting that's over here. I'll make this just 1. Perfect. Let's get that to the side. Here's another one. I mean, these breakouts, the market has been so weak, like the breakouts have already happened. This actually is something like, the breakout is just happening, but it hasn't really flushed through. So maybe Asana might be interesting. So let's just say I have my eye on Asana. Actually, this is perfect. The breakout hasn't happened yet. It keeps testing resistance, and I want to see a break and then pull back, and then I want to short. So let's see if the company is crappy right now. Well, earnings per share is down, but revenue is up. Let's see. I want to try to find their latest earnings report and see if they maybe been guiding down or anything like that. Investor relations. Let's see, news. So it looks like the company is doing okay. So it's maybe not the best short. But the way the market is so weak, this is still a good technical pattern. So I'm going to still keep an eye on it. And if this breaks through and presents itself as a good trade, I'll just hop in for the short. Is it optionable? Yes. So then I'm going to go see if those option prices are within, sometimes, the prices of options is like $2,000 for one contract. That's not what I'm trading, but if it's 50 cents calls, $1 calls, $1 calls is $100 for a contract, $2 calls. It's the kind of things that I want to trade. I don't want to trade, $15 calls, $20 calls, because that's just too much risk for me personally. So that's kind of what I'm doing. I'm just going through these companies, and then I'm just going through their fundamentals. And you would think that it's easy to find companies that are doing crappy, but once again, this sell-off is not a sell-off because the tech industry is doing bad. The sell-off is a sell-off because of just it's a more of a financial sell-off, not like a business. Not that the industry is really slowing, if that makes sense.
Is it like more like a cyclical thing?
I don't want to say cyclical. I maybe want to say it's more like cause and effect, right? More so,
Like the rates, like with the
Hmm?
rates, like with the 10-year rates and all that stuff.
Yeah, and not just the rates, but more so just the overall monetary policy, right? We pump so much money into the system. At some point, they have to. They pump so much money into the system that pump the market up. Whether companies are good or bad, that pump the market up. And then you have to get to a place where you have to stop with these monetary policies and start tightening things up. And so if they're tightening things up, whether companies are good or bad, they're going to go down. And that's kind of what we're seeing. And so I just want to say, I feel like it's just more like cause and effect, more so than saying anything else.
Gotcha.
Yeah. All right. Any other questions on this topic, Alex? I think this is a good question that you asked.
I forgot. I forgot what I was going to say. I think I was going to ask. Oh yeah, are you looking like a month out on these options when you're shorting, or 3 months out? How far are you going out?
Yeah. So I'm even looking at 6 months out personally, but because I like to give myself some time.
Yeah,
But
good.
I'm really gonna really get aggressive with the whole option shorting, or even shorting with shares, really based on what the Fed does. Because I feel like if the Fed comes out and says they're gonna raise, if they say they're gonna raise interest rates by maybe almost 0.5% or 0.25%, and they plan to do like 4 or 5 raises for the year, then I think it's just gonna set a trend in the market. And there's gonna be a lot of interest rate pressure, and there'll be a lot of just a lot of selling going on, and also for good reason. The Nasdaq is up over 150% in the last 2 years. I know in any given year the Nasdaq might be up like 15%. You know, so there's other people taking profits. Someone's been in the market for the last 2 years. I have a colleague of mine. He bought like $500,000 worth of stocks at the March 2020 lows, and he made $2 million. So people also like made a lot of money and like are liquidating and stuff like that. So I think there's all kinds of selling pressure that's going on into the market right now. But yeah. Okay, so just getting back onto topic, I just kind of wanted to go through some other research tools for you guys, just for you guys to be aware of. I know we do FinViz a lot, but one of my other favorites that I feel like I have never showed you guys is Atom Finance. So they're a new tool. They have a free tier and a paid tier. I actually pay for the paid tier. I like their premium features. But pretty much they also have a stock screener. So you can come here, screen. You could come here and say, so that, they have some other things, right? Like I could screen for guidance, company guidance. But this one is based on a dollar amount. I would just want to say if it's like, I would want that on a percentage basis so that maybe that we won't use that one. But maybe we might say, what could we look for? Let's just say maybe I'm doing the active trading thing, right? I just want to see who was down maybe more than -5%. Why is nothing? Okay, and that's doing today's change. So you have to do this during a trading day because there's no trading activity today. Let's see something else. But this thing has a stock screener. Let's maybe not say too much on the stock screener because that's not really the thing I'm most crazy about. One of the things I think is really cool with Atom Finance actually is they have this thing called X-ray. So let's say I want to see, who's lowering guidance. I can literally come here, type in lower guidance, and you see how they have these filter result types. You have news story, event transcript, investor presentations, and SEC filings, right? So now they're just giving us in their database everyone that they have that mentioned lowering guidance, right? And for me, with my shorting strategy, this is a good way to find these companies to short because I want companies that are already slowing down or in the negative in some kind of capacity with this operations. And then they give us a bunch here. We don't have to go through all these companies, right? But this is a way to build a list. You can even come here and say like, okay, I want the companies in technology that said that they're lowering guidance. And then now I get all those here, right? And you can even see the document right in Atom Finance. So you don't have to even go to the website, right? They highlight it for you. Where do they have it? Yeah. So like this is like a earnings transcript call or whatever. What's some other cool features? So that's one really cool feature. I think it's very powerful. There was a guy that I was working with, and he is trying to sell services to publicly traded companies in Maryland. So like I showed him this, and he literally just came here and was just like, Maryland, who is listed in Maryland on the New York Stock Exchange, or who is doing business in Maryland, or whatever. And then he was able to find a bunch of companies to go out and try to do business with. What happened with that, I don't know. But still, that's a pretty interesting strategy. Now, some other things, you guys know that I'm really into financials, and I think, seeing financials in a way that you could just quickly and easily go through things is like always great. So you see like here, they have like, this is the income statement, and they have for the last 6 years or 5 years, 1, 2, 3, 4, 5, 6, for the last 6 years. So rather than going through the income statement or the 10Ks or 10Qs, which just takes a little bit of time, if you already know what companies you're looking for, and you just want to go through their books really quickly, you can just come here and you can get that comparison rather quickly, right? Because that's really what we're doing, right? We want to see the growth over time. And maybe this is good because maybe this is a good short, I should say, because as you see, total revenue was picking up, and then now it's been slowing down every year. So maybe I got to investigate to see if this company is going to be guiding lower. And if they are, this might be a good shorting opportunity. Let's see what the chart looks like on. I actually was long Ambarella at one point. And they're doing some really great stuff in tech. You see, this is once again my classic pattern. I love the breakout trades, and this is what I was looking for in the Nasdaq. I want to see a break, pull into the level, and then right here you could get really big right here because you're risking almost nothing, right? If the thing comes above, you get stopped out, and that's fine. You get stopped out for a small gain, but you see that if you're correct, you literally could risk $2 or $3 to make. How much was this? 170 to 135, and it's 135 and still going down the way this setup is.
That's a big gap down too from right before.
Yep. I'm just trying to do the math. That's like 40 points. You're risking $3 to make 40 points plus. And so this is why I like this technical setup so much. It's a low risk, high reward trade when you have momentum in your favor. And obviously we do, because the NASDAQ's momentum has been crazy. So you could do that. And they give you this graph, right? You can see the total revenue, gross profit. You could come here and click on things. You could click on net income, and then it's going to show you the net income. If you want to remove, let's say we want to remove gross profit, right? We can see revenues compared to net income over time. I think that's valuable. You can see their estimates. So this is the change in revenue estimates over time, right? So I guess people are estimating that over time, people are estimating that they're going to do better, and I guess that's okay. You get to see the analyst recommendations. You get to see analyst and company actions, right? So what are analysts saying about the companies or whatever? You get some valuation data. So I don't know. I think this is a good hub for like fundamental analysis. Anybody have any questions about this tool?
I was just going to say this is a monster gem. I appreciate it.
Yeah, it's really good. Also, you can sync your portfolio with it. So then, like, it's giving you news. It's giving you, like, you see, like, I have my portfolio statistics. My average PE is 29.6. My average revenue growth is 19%. Like, they give you, asset allocation. So they also give you a bunch of stuff if you sync your portfolio to it. What else do they have for us? They have a bunch of things. Oh, they have another premium tool that I like a lot, Premium Metrics. So they have like some premium. So, so these are things, some major categories, right? You can come here and go advertising and social media. You can get, this is not data that's easy to find, but they have it here, like, just daily active users for Facebook, Snapchat, and Twitter. This is actually pretty insightful, as you can see this over time, monthly active users over time. North American ARP, what is average revenue per user? This is interesting, right? For Snap, that's actually steadily going up. That's a good sign. For Facebook has been going down. It's on a downtrend. That's interesting. So I mean, this is one category of things. And I don't think that, this is preset by Atom, so that's why it's kind of limited. And what they're giving. We could go to e-commerce, right? And maybe there's a little bit better data, but they have active buyers for China e-commerce. So these are like Chinese e-commerce companies. And this is a good way to get some, if you are in these kind of stocks, you can just quickly get some good data and also see what the competition is doing. So I like that tool a lot. But this is a premium metric. You only can get this if you're paying like that $10 a month. They also have chats. I don't really use the chat, but maybe I should start getting active in here. And more so, you could just see what people are doing, whatever the case might be. Trying to see what other features are cool in here. They give you the news on your portfolio, and you could come and search, do that X-ray search thing where you can search through the documents. So this is a pretty powerful tool. It's a brand new tool. Let's see. I think there's some other features. There's so many features with this thing. Let's go back to Amberella. Let's click Amazon. Peer analysis. So you could come here also and just see the companies that are in the industry. And you could add whoever you want to add. They have a preset for you, but for each company that you select, through their artificial intelligence. But if you want to add your own companies, you can. If you want to add the SPY or NASDAQ, you can. Let's add the SPY just so we could just have that example. The SPY is the S&P 500 ETF, by the way, if you guys don't know that. And you could just get some nice, quick comparative analysis with the industry, right? And you can switch it up. You could go valuation multiples. Enterprise value to revenue, enterprise value. So they have last 12 months, this year, and I think FY1 is last year, and that's the year before last year. So I think they're still building out their product, and I think they need to actually maybe send that feedback, right? They should just put the year rather than this FY0, FY1. But whatever, we don't got to get into that. You can get growth metrics and see what the comparison is, right? Just I think once again, right, you can go through each of these companies, 10Ks, 10Qs, and get this data, or you can just come here and they already have it set up for you, with all these different metrics, and you can make a custom table for whatever's important for you. So yeah, that's Atom Finance. So definitely, and I'm gonna make a Word document to share with you guys for all the tools that we have today. So yeah, so that was Atom Finance.
Hey, sorry, I stepped away from my computer. So is this Atom Finance? Is it like a platform like FinViz, or is it different?
It is a platform like FinViz in that it's a tool to research stocks. So like it is a stock screener, it is a stock research tool. But I would say it just has a lot of different features than FinViz, and maybe you could say it's actually more powerful than FinViz. Maybe you could say this is FinViz on steroids, but FinViz has a much better stock screener in terms of like ease of use. FinViz's stock screen is a lot easier to use, but this thing has so much more features, and it is very data rich.
Gotcha. Okay, and is this free as well?
They have a free tier and a paid tier, but the paid tier is only $10 a month. And I think they give you maybe a 3-month free trial. I mean, I got this thing almost a year ago or something like that. So at that time, they would give like a 3-month free trial for the premium too. So you could try it out for free for some time and see if you like it. But it's not
free too, right? FinViz is free too, right?
Yeah, FinViz is free.
Okay, all right, thank you.
Jeffrey, it doesn't look like this has a free version anymore. I think it's all paid, but it's only $6.99 now.
Oh, okay. Wow. I guess I was always paying for it, but they used to have a freemium model. I guess you're on the site. Let me see. Let me check that out real quick. Oh crap. Man, I closed the window. I did not mean to close the window. How do I? Okay, perfect. I had all these tabs. Okay, perfect. They're all here.
You should try OneTab.
Say that again?
You should try the plugin OneTab.
Okay, I'll check that out.
Yeah, it saves all your open tabs for you. I used to have a bunch of tabs like that too, and my friend turned me on to that. It's been a game changer.
Okay, yeah, I'm gonna check that out. That sounds actually really clutch. Oh wait, I'm in the wrong thing. But yeah, you're right. It's only they only have the paid tier now. That sucks. I thought this was free. But it's inexpensive, I mean, if you're actively doing research, I think it's worth it because it makes your life very easy.
Yeah, think how easily we waste $7 a month.
Yeah, oh, that's a fact. That is I waste more than $7 a month, but that's a whole different conversation. Okay, so the next tool I want to bring you guys to is Seeking Alpha. This is another really good research tool, and this is good just to get consensus from people. This actually might become also something. This used to be free, and now they're making people pay, which kind of sucks. You could just come here, and if let's say you want to know, Netflix just had the crazy earnings the other day. Maybe you just want to see what people think about Netflix. Right, you can just come in and read articles, right? And people are just doing deep fundamental research and doing a lot of data-driven stuff. So you can just come and see what people think about it.
Hey Jeff, did you get to capitalize on any of that Netflix downfall?
I did not, because I was not prepared. So it's a good question you're asking, and I think to really do this whole active trading thing successfully, you have to be prepped. You know what I mean? So I wasn't following Netflix. I wasn't expecting Netflix to have earnings, and I know that thing went crazy, and then that happened. So I missed that. But there's another technical setup that they call a second day trade or a second day play. So pretty much it means a stock had a crazy day, up or down, doesn't matter the direction, for whatever reason, and one day And then on the second day, the idea is that if the news was bad enough or if the news was good enough, the stock is probably going to trend in that direction. And then you could just go in and, you know, and catch a couple more points on that second day if it continues to trend. Does that make sense?
Yeah, that makes good sense. I'm definitely looking at that even more.
Yeah. You know, man, I wish I had my when I was working at the hedge fund, we had a whole playbook of just different trading patterns and different trading scenarios, and we had to study it. And that's how you get good at these things, you know. Maybe I will work on a playbook for you guys who's interested in active trading. But yeah. So yeah, Seeking Alpha is a great resource just to get some professional research and see what the consensus is about what stocks you might be investing in. And they have all kind of categories. You know, Vanessa, you're talking about dividends. You can come here and find dividend ideas, dividend news, whatever, dividend ETFs. You can let's see. You know, they have all kind of content on here. And so I was actually a writer for Seeking Alpha at one point. This was like 5 years ago. But pretty much what they do is you know, I don't know how many writers they have now, but let's say they have like 5,000 or 10,000 writers, and it's just a bunch of financial analysts doing research reports. So they just, you know, it's a platform for investment research. So just I think just having a place where you know, sometimes we're doing our own research and you just want to know what someone else thinks, you know, and Seeking Alpha is a good place to come and see what someone else thinks. All right, so now I want to get into some platforms, excuse me, websites for just data, right? So, and I'm going to put this on a Word document for you guys. Bureau of Economic Analysis from the U.S. Department of Commerce. This is a place where so much data comes through them, right? GDP data comes through them, consumer spending comes through them. You know, all this income, and you know, I know you. I speak to speak to you guys a lot about you know, the state of the consumer and how like personal spending is down, personal income is down, right? All this data is actually coming from the Bureau of Economic Analysis. And the thing I like about coming to websites like this is that, you know, when you're going on trading economics, right, all you're getting is like the number, right? Is personal income down 3%, 4%, whatever. Where if you come here, you can really get insightful data. Let's not use this one. Full release and tables. That's maybe what we want, right? But you know, you get the analysis of what's happening with personal income. You're seeing like the difference, like, you know, personal income, disposable income, personal consumption expenditures. That's PCE. Their inflation one is actually really good. Let me go to their inflation one because that one is maybe like, you know, just the whole personal income category is a little more simple. But let's go to inflation. You know what? Maybe it's not this inflation that we want. Well, let's see what they have here. I know one of these websites, like they give you a complete breakdown. I mean, and this is a little bit of a breakdown, right? But you can see inflation based on like durable goods or non-durable goods, and then services. But you know what? It's probably in the Bureau of Labor Statistics that we get the really good financial data. So this is one place we could come and, you know, you just come here, and if you know that you're interested in any kind of data, you can just come here and see what they have and see if you can incorporate that into your research. You know, I follow the retail space pretty closely as far as like trading and investing. In my portfolio, I had eBay, Etsy, Walmart, and Amazon. You know, so that's all retail companies, right? So I need to be on top of like consumer spending and consumer data and stuff like that, and just understand the state of the consumer so I can make better decisions. U.S. Bureau of Labor Statistics. You know, once again, that's another place where you get the official data, right? Okay, so they have, I think this is maybe where they give the consumer price index. Let me see if they give the full table. I think it's here. Perfect. So you see like here, you could come here and see like, you'll see that the CPI is up 7% or whatever, but you can really see which industry is actually or the prices of their goods are going up. And you get a breakdown of like every industry, right? So this is actually really good data, right? If you guys are like trying to like dig deeper into into inflation and why it's going up, right? Just knowing what sectors are really driving it, I think is very important. Yeah, like you see, you get all this data. I think there's one of them, and we don't have to like, go through this too much. There's one of them that gives you like the full, maybe it's this one that gives you everything in one document. So I see they broke it down to 7 tables. Yeah, I think this is the one, right? It gives you everything. So you got retail, you got energy, you have clothes, you have medicine, you have recreation, pet food, so you can literally see every single industry are their prices going up, right? So this use case, if you are looking to invest in I don't know, tobacco products, right? You could come here and see like, hey, what is the trend of tobacco prices? And you can really get that data. And I think that's very powerful data, right? Because when we see consumer price index, all we're seeing is that, oh, prices have gone up 7%. But like, which industry? So for example, I remember I was going through this like a month or two ago, and like the energy industry and food inflation are like probably the 2 largest segments for inflation, right? So understanding that puts in my mind that, hey, maybe I should be focusing on maybe doing some trades. And that, I've been talking about food for some time now, and that's kind of like where that came from. I mean, there was Bill Gates becoming the largest owner of farmland like a year or two ago, and then seeing just food inflation going up, right? If food prices are going up, people have to buy food. That means food stocks are going to go up because people have to buy food. So that's just a tangible example. But they have all kind of data sets. You see subjects over here: inflation and prices, unemployment data, productivity data, employment data, pay and benefits.
I'm sorry, Jeff. That unemployment and employment stuff, that there's like a report that comes out monthly. Is that data on here too? I mean, I'm sure it is. But...
Yep. Let's see, economic releases.
That seems to be a big market mover in the futures market.
Job data is definitely very important right now. But yeah, this is where it comes from. The job data comes from they're literally the Bureau of Labor Statistics. So this is the official body that tracks reports. And so that's another thing too, right? The Bureau of Economic Analysis, BEA, that is the official reporting body that's like collecting all these data sets and reporting it. And don't worry, guys, I'm going to put all this in a Word document for you guys and share it on the Telegram and through email so you guys have it. Another really good resource, whoops, not that one, is Fred. So Fred is the St. Louis Fed, Federal Reserve Bank of St. Louis. And I don't know why, but for some reason, like just like all the Federal Reserve Bank data is just congregated on their website and like, I guess through their portal or whatever. So you just, you go to stlouisfed.org. You come here, Fred economic data. Let's browse by category, right? And now you have all these things, right? Money, banking, and finance, so interest rates, exchange rates, monetary data, so like money supply, money velocity. These might be things that you're not too into, because this is like deep economic stuff, but it's useful information regardless. Employment data, population data, production and business activity, prices, like they got like everything here. So you just come here, if there's any data that you want. And once again, right, this is official data. Some of the data that that is reported through Fred is aggregated from like other departments like the Bureau of Labor Statistics or the Bureau of Economic Analysis. And then, you know, a lot of their data is also literally them surveying businesses, surveying banks, etc. So I just want to say, like, they're a mixture of getting data from other bodies and making their own data. So that's that. And I want to say that in terms of like research tools, I mean, at least for me, for what I'm aware of and what I know, that's about it. Like, you know, I'm going to these different sources for economic data. And then I'm using tools like Atom Finance, FinViz. And I also use Thinkorswim, but we're gonna have a session on Thinkorswim, so I just don't want to get into that now. But you know, I also use Thinkorswim to use for when I'm doing like the active trading thing. It's a really good tool to like screen for stocks. Oh yes, Lana, that's a good point. Yep. Well, where did you see the yield curve? Is it on this website? It probably is, or was it a different website, Jolanda?
Yeah, it's on there somewhere. I have it saved like in my on my internet files where I can just click on the link, but it's on there somewhere. There's like a lot of stuff on there, I know, but there's like a chart in there that keeps up with the yield curve, which everybody talks about. So, you know, if it inverts, it's something to, you know, keep an eye on.
Yes, yes, no, that's very important right now. Let's see, what tools do they have?
I know there's treasury.gov that keeps that also keeps up with the yield curve. It gives you the data for how much it's moved to for the last, like, you know, few years. You can go back a long ways and look at it.
Yes, you know, I'm actually glad that you said that. So they have that right here. So at Treasury, so this is another, you know, I'm glad you brought that up, because it's actually something that I'm checking almost every day because I'm trying to follow interest rate data, right? How do we get to interest rate data though? Let me see, 10-year Treasury note auction. Oh, you know what? It's treasurydirect.gov. If you guys want to see, so when we're seeing that interest rates are going up, right? There's two types of interest rates. There is the interest rates that the Federal Reserve sets for the banks, and that has been at 0 for the last 2 years. But then there's what's decided in the market, Treasury notes, Treasury bills, and those interest rates. And when they're talking about those interest rates going up, it's actually the Treasury notes interest rates that's been going up. So you can pretty much come here. You can see the upcoming auctions. The type of note that is being followed the most is the 10-year Treasury notes. And pretty much you can come here and see, like, you know, what are the upcoming auctions and stuff like that. So you know, you can know what date, you know, what date the auction is going to be happening. So I mean, I don't think any of these are too important, and I don't see the 10-year, but like, you know, I think these things come out every week or every couple of days or whatever for the bonds, for the bond auctions. And then you can also see past results. Right. So this is the 10-year right here. And so yeah, treasurydirect.gov. But treasury.gov too is clearly we can see that they have some good data. So if you guys are interested in, like, you know, following this interest rate stuff, this is a good resource. And
So are you saying, just to clarify, are you saying that these treasury interest rates have already started to rise, and so we're tracking that, but then we hear the Fed talking about raising interest rates, which is something totally different? Am I hearing that right?
It's different, but it's related. So I don't want to say it's totally different. So I just want to show you, right? Here's the interest rates on the 10-year bonds. Whoops. And let's make it a little bit of a longer time horizon, right? So this is 2020. These things were really low, and interest rates for the 10-year bonds have been going up this entire time. But you also got to understand that the interest rates on Treasury bonds are determined by the market. You know, so it's not determined by like the Fed or someone trying to like set things, right? The Fed literally sets its rate. So once again, right, there's the interest rates for the bonds, and I mean for treasury bonds and treasury notes and treasury bills and whatever. And those interest rates help decide what interest rates are going to be for everything else, you know, but the Fed funds rate, that is the rate that banks can borrow money, right? And then so if they raise rates, then the banks are going to raise rates on mortgages, and they're going to raise rates on what you call it, mortgages. They're going to raise rates. They're probably going to cut rates. I mean, excuse me, raise rates on your checking accounts, raise rates on, like, you know, just the different products or whatever that banks offer. So yeah, so there's the two different interest rates, and I think people don't really know that, and sometimes are a little confused by that. But that is our financial system.
Hey, Jeff, when we talk about yield curve inverting, we're talking about the 10 and the 30 year, right? Mainly.
Yes, you know, I was watching a video on this the other day actually, and what the video was saying is that I think it's more so like the curve between the 2 and the 30 year, you know, and pretty much, right, just, you know, you get paid a higher interest rate, and let me see if I can just find an image of it, of a yield curve.
I think it happened in what, October of 19 was the last time.
Maybe, I'm not sure.
I think that's what it was.
Trying to, okay, here we go. Right, so like a regular yield curve, right, as time goes on, which means as an investor, right, the longer you have to wait to get your money back, the greater the risk. As time goes on, the rates should be going higher. And here's what they say, like, you know, this is a normal curve, you know, but an inverted yield curve, investors, since maybe the current business environment might feel so risky, investors will pay a higher interest rate for the short term and a lower interest rate for the long term. And that's kind of what's going on. And so, and then I think that the video I was watching, like, they try to look for the inversion to happen between the 2 and the 30. But what you're talking about is like between the 10 and the 30. So I want to say I'm not an expert on interest rates. I'm not an expert on bonds. I may know a little bit more than you guys, but this is an area where I don't know it all. But I do understand the concept at a high level. But yeah, that's treasury. That's yield curves.
So let me ask this question then. So at a high level, what does this all mean? You know, like if the yield curve is inverted, you know, in general, if we're watching this, what should we expect to happen if it inverts, or, you know, what does that mean in general?
Yeah, so really it just means that we are entering a negative business environment. That's really what that's a reflection of, right? And that's usually when it happens. And then historically, right, the inverted yield curve is not something that happens every day, or something that happens too frequently. But when it does happen, they say it's been a predictor of every major recession started with an inverted yield curve. And it makes sense, right? Because the investors are feeling so fearful that they'll pay higher interest rates for the short term than for the long term.
This is what I learned in the bond classes that I took, that after the yield curve does invert, it's within 6 to 18 months usually is when a crash happens.
Yes, yep. And there's like data around that. I was watching a really good video. I'll make sure I share that video with the group, because I feel like these guys really broke it down, and they also gave some good they showed all the examples of when the market crashed following an inverted yield curve. So that's why people follow it so closely, because it's kind of a predictor of a recession or a market crash. But yeah, okay. So these are a variety of research tools and data sources. Actually, there's one more. Quandle. Quandle's another. Oh, Quandle was bought by NASDAQ. Oh my God, that's so funny. So now this website looks completely different. That's really interesting. Let's see, individual users. All right, you know what? Let me not. They completely changed this website, so let me not even go into this right now.
They must have been giving out too much of that good info.
Yeah. Now, Quandle is a great data platform, and I used to use it a lot. But I mean, it pretty much Quandle is just a place that, like, you see, like all this like Bureau of Economic Analysis, Bureau of Labor Statistics, all that Fed data. And then they also do a lot of like, see the way Atom is like aggregating data from like Facebook and this, that, and the third for like those different metrics that they created. Quandle is a platform like that just aggregates all the data, but they just put it in a way that's just very simple and easy to access and, you know, easy to play around with and stuff like that. But I'll maybe go through the NASDAQ one and show you guys that next week. So now that's one thing, right? And the last thing I wanted to maybe just cover today is how do we do, actually, no, there's one more, ETF DB. This is a great tool. Pretty much an ETF of all like the publicly listed, you know, ETFs in the US. And so I know I was talking to you guys how I'm looking at oil, I'm looking at uranium, I'm looking at copper, I'm looking at all these things, right? So rather than necessarily buying or shorting individual stocks, I can just play the themes through ETFs. And I'm actually am looking to do that. And you can pretty much come to this etfdb.com and you can find, no, I mean, it's pretty straightforward. You know, you come and click this database right here and you can find ETFs by asset classes. You know, if you're looking for equities or commodities or bond ETFs, whatever, that's fine. You can find ETFs based on sectors, right? So if you want to short technology, you can just go and find technology ETF. I mean, in my case, I would want a inverse technology ETF, meaning that they're shorting the NASDAQ for me or something like that. I maybe don't have to go through it, but you can find ETFs by country. Like this thing is like great, So I know you guys. I'm always talking about how I invested like in Taiwan and Singapore and South Korea and blah blah blah. I came here and I found ETFs for those countries. Let's see, commodities. Right. I know I'm talking about uranium. Right. I found a uranium ETF in here somewhere. Man, where is it at? Maybe it's on the industry. Yep, it was on the industry. So, I came here and I found my little uranium ETF.
Which one did you get into?
I didn't get into it yet
Okay.
because I still need to do my research on the uranium industry, but I still found my ETF. So when I am ready to do it, I can just hop in. So yeah, ETF DB is a great tool for that. They also have an ETF screener, right? So let's just say, like let's say we want to short the NASDAQ, right? I want to find an equity ETF. Let's see. It doesn't say NASDAQ. All right, well, we want inverse, so we click yes. Oh, sector. Boom, technology. And now they give me, you know, ETFs that are already shorting, already shorting for me. So this looks interesting. So another thing too, if you guys are here, pay attention to the liquidity on the ETFs, right? Especially if you're actively trading, you do not want to be trading an ETF that only trades 17,000 shares a day, right? But this is nice and liquid. 27 million shares a day is liquid. 914,000 shares a day. It's not the most liquid, but you can get in and out. But like this, like, you don't want to be in this. Let's see. I'm just curious what the SOXS chart is looking like. Oh yeah, so super cheap. This the Nasdaq keeps selling off. $4 stock, you can get in there and make some good money. And is it optionable? Yes, so that's good.
Cheap options right there.
Yeah, yep. And they trade 27 million shares, so I'm sure the options are liquid as well. But that would have to be seen. Or wow, the other day it traded almost 70 million shares. So that's good. Liquidity is very important, especially if you're doing some active trading. So that's ETFDB. Any questions about ETF investing in general? Nope. Okay. And then lastly, I just wanted to talk about like how to research an industry. So first and foremost, almost every industry has like a trade organization. So I know, like, let's just use solar energy, for example. I think it's seia.org. I was doing a lot of research on here because I was investing in solar at one point. I mean, I'm still bullish on solar for the long term, right? So you can get some industry news, right? This is very important stuff, like rulings or whatever. But they also provide data. Okay, there we go. Perfect. Solar industry data overview. Right. And then you can get just a good outlook, on the industry. Right here, they're telling us like, utility projects are the largest types of projects that are out there. You can see the job growth. You can see the growth in deployment. Right. And then this is also the decline in prices. So this is good, right? Because as solar energy becomes cheaper, it becomes more competitive with oil, and it makes it easier for people to start switching from oil to solar because the energy is getting cheaper and cheaper. So yeah, I mean, we don't have to go through this report, but this is just an example, right? Like if you're trying to research an industry, you should first try to find the trade organization for that industry. So let's say, like, I don't know what it is, so let's try to find uranium, because I keep talking about uranium. Maybe I shouldn't say trade organization. Let's maybe say Global Uranium Association. So maybe it's got to like play around with the words a little bit. Okay, so now maybe this is something. Worlduranium.org. And let's see what they got for us. Okay, so this is giving us mining production, but this is not the main website. Let's just go to the home page and see what that looks like. Or is this the home page? Okay, it's loading. So first thing, actually, what you want to do is this a legitimate association? So let's go, you want to go and read about the association. Let's see, governance and leadership. Who's in this thing? And we don't have to spend the time going through this, right? But this is just the ways, the first thing you want to know, is the association like a legitimate association, right? Because there could be all kind of associations. So that's one thing you want to do when you're first finding an association. And I'm sorry, I feel like this website is slow, or maybe I just have too many tabs open. Let me close everything else. They have their report, right? This is exactly what we want, nuclear fuel report. And like these industry associations, right? So they'll give you like an overview of the industry, what is growth expected to look like, who are the big players, et cetera, right? And so for myself, I'm usually doing a lot of like thematic based investing, right? Solar energy, semiconductors, Taiwan, whatever. Whatever industry I'm looking at, I want to see, what is that industry doing overall? And the best way to get that data is just by finding the trade organization. Let me see. I think there was another one that I heard of. Okay, I know not. This is an African country. I think one of these African countries, Nambia, is one of the largest producers of uranium globally. So once again, you come here, see what data they have, etc. And this is just an example of just like doing industry research. And I think industry research is very important because at least this is my philosophy. If an industry is growing 20% a year, 30% a year, 50% a year over the next 5 years, 10 years, 20 years, whatever, if the whole industry is growing at that rate, then the cream of the crop company is going to grow at like 200%, 300%, et cetera. So that's why I have so much focus on things at the industry level. And I just like to be investing in things that if the industry is growing, then once again, the leaders in that industry are going to outperform the average, and it just makes for easier returns. And that's kind of like my thesis and my way of thinking. So I know we touched upon a lot of different things today, but maybe we just wanted to pause for questions or any thoughts. Nope. Okay.
Yeah, I was just gonna say I appreciate. Oh, go ahead, please.
Sorry, I just had one question. Just thinking about all the research tools that you gave, those were really good, and a lot of them I've looked at before. But I wanted to know your thoughts on, rating systems and things like that. Knowing it can't substitute our own research, but there are companies or websites like Tip Ranks and it's other companies that rate stocks, 2 or 3. What's your thoughts on that?
So I am fine. I'm fine with those resources, but you just got to take them as a grain of salt. And so there's two things, right? Some of those resources that are rating and ranking stocks, I will take them seriously if they give an explanation behind their ranking, right? If all they say is like, hey, these are the top 10 stocks in this industry, and they say nothing else, then like, because for me, like, I need to know why you're saying this for me to know if your information is valuable or not. So that's just my stance on it. That doesn't mean that they're good or they're bad. Because for me, if I'm looking at other people's ratings and rankings, which going to Seeking Alpha is a form of that, right? I'm looking at someone else's opinion on something, but with Seeking Alpha, like they explain to you why they think this, and they give you data, and they give you, all the good stuff. So for me, as long as they're explaining why, and not just saying like, hey, this stock is, ranked 5 out of 5 on our, valuation scanner or whatever, I would look at it. It's information, and no one has a monopoly on ideas, and I think we can learn something from anything and everybody. So that's my 2 cents.
Okay, thank you.
Mm-hmm. Anybody else have any questions?
I was just gonna say, Jeff, I appreciate you showing us how to navigate these sites too, as well. Sometimes the hard part is navigating these sites. We have a long list of these sites, but sometimes that's the hard part. And also, that playbook that you mentioned earlier would be amazing.
Yeah, I'll work on that. I'll work on that. You gotta give me
That
some.
can be a side. That can be a side job. That
Yeah.
can be like a little side thing you do on the side for sure. But yeah,
Yeah.
that would be amazing. I do have a technical analysis book. It's called Technical Analysis Using Multiple Time Frames, and it really talks about trend trading a lot, kind of the type of trading that I like and you like. So I didn't know if you wanted me maybe to post that in the chat, or if you want to maybe look at it first.
Oh no, feel free to. I'm very familiar with that book. I actually never read it, but I'm very familiar with the book, and I definitely use multiple time frame analysis. So that's a great.
Yeah, it's good.
So yeah,
Yeah,
please
I
share it.
love it.
That'll be great for the group.
Okay, cool.
Yeah, and if anyone has any resources that you guys are using that you think are you found impactful for yourself, feel free to share it with the group. I think we're all trying to learn, and even myself. So yeah, definitely share with the group. Thanks, Alex.
For sure.
Yep. All right. So it seems like there's not too many questions. I know, this wasn't too intensive of a day. So I guess we could wrap this up here. Next week we're going to be talking about, so I just want to make sure you guys tune in for next week. Next week we're going to be getting into, and there will be a presentation, just these things around these tools. I feel like there's nothing to present. It's just me showing you guys, so I don't make a presentation for them. But next week we're going to be talking about the Federal Reserve, fiscal policy, monetary policy, and how those things work and how those things affect the market, especially now that we're in such a macro time. And I think it's just important. If you're active in the financial markets, you need to understand what is the economic machine, who are the largest players in this economic machine, which is the U.S. Treasury and the Federal Reserve, and what can they do to affect the markets, right? They can't just do any and everything, right? Like the Federal Reserve can only print money and lower or raise interest rates, or provide loans. Like that's all they can do, right? And then the Treasury, they have the things that they can do, right? So when you can understand what tools they have in their toolbox and how they can interact with the market, you can navigate the market better, especially during these times where whatever the Fed does or says is going to really have an impact. So that's next week. And then I was able to secure a speaker. He's going to come on February 19th. I wanted him to come and do 2 sessions, but he felt like he could do it all in one. And so he's going to come and do a session on an introduction to economics, and then the business cycle, and then how how you can use the business cycle to if you understand where we are in the business cycle, you either know to go long stocks or go short stocks. And I even want to say this guy was talking about shorting the market since like October and November. And I think he's done pretty well shorting bonds because he was really ahead of the game with that one. But yeah, this guy, he ran $4 billion. Like, he's a very serious economist, brilliant man. So I'm excited for that. So I'll send the calendar invites. That's going to be on February 19th. That's a Saturday. That's when he's available to come. And I was also thinking, because I know I did the financial ratio stuff, and I kind of did that on a whim, because that wasn't really planned. That was just more like I realized we did the financial statements, and I felt like y'all needed that. But I was thinking maybe after we do this stuff with the Fed next week, we could do another session on financial ratios. I just feel like, I don't know, I'm not confident that you guys are confident on that topic. How do you guys feel about doing another session on financial ratios?
I'm 100% with it.
Yeah.
Yeah, same.
I think that's a good idea.
Okay, cool. All right, cool. So we got some good stuff ahead of us. Thank you as always for joining the calls on Saturday. And yeah, if anyone wants to get some one-on-one time with me, I'm gonna share the link in the Telegram, and feel free to book time with me.
Jeff, are we still meeting again on Wednesday?
Oh yeah. So I think Roselle, that's a good question. I think Roselle sent it out. Do you guys have it in your calendar? You should have gotten a calendar invite where it's a recurring meeting every Wednesday.
I have it in my calendar.
Okay.
Yeah, let me double check that.
Yeah. So yeah, we are meeting Wednesday, and we're going to be meeting every Wednesday. And Wednesday is the forum to just talk about trading ideas, or talk about what we've learned, or how can we apply what we've learned. So I think for you guys, I'm going to have a lot of stuff that I've researched. So if you guys can start researching some ideas, even if you're not investing, just start researching some stuff, and you guys can maybe have some questions or some stuff to look at as a group together. when Wednesday comes.
Hey, Jeff, have you released any of those Wednesday sessions? I haven't been able to make one yet.
I haven't. Yes, I was saying that at the beginning of the call, and so I'm having an issue with my video editor.
Oh,
Both
okay.
Canva and Premiere Rush from Adobe. So I'm not able to actually download the videos. I don't even really do any video editing. I just gotta put a cover on it and put it on YouTube, but I can't download it. Like it just my computer's running for 4 hours and it never downloads. So
Okay.
I gotta try to figure out a way to get that fixed.
That's all good.
Yeah. So as soon as it's there, I'll let you guys know. But yeah, I've only recorded one session anyway from Wednesday.
So the Wednesday sessions are reoccurring? They'll
Yep.
be every Wednesday?
Yep.
Oh, okay, great. Yeah, I don't think I got that calendar invite.
No problem. I will make sure, because you know what? You might not be, because you're my bestie. Francis is like my best friend. You're not on the sign up list. And so Roselle probably put everyone from the sign up list.
Okay,
I've got to add your email. It's not a problem.
that's great. This was wonderful, Jeff. You're amazing, man.
Thank you. I learned from the best.
And I'm not just saying that because I'm your bestie.
Thank you, Francis. I appreciate you.
Yeah, I'll second that. I'll second that.
Sure. I appreciate you guys. You guys keep me going, truly and honestly. We all could be doing anything on the Saturday. I know I would love to be sleeping and doing nothing. But I'm very happy and pumped to come and do this with you guys every Saturday and Wednesday.
Yeah, this is great.
We appreciate it.
You're so genuine about it. Like there's so many people out there doing all this Forex trading and thinking they're like wizards and people are charging them and it's just ridiculous what's happening out there. But for you to be so genuine about this and you like really want to see us win, like you're amazing, man. I can't wait till you make it.
Yes, thank you. We're making it together. It's already done. God willing.
Yes, amen
That's
to
right.
that.
That's right. It's already done.
Yeah. All right. Well, thank you guys. Have a great weekend and I'll see you guys on Wednesday.
Take care.
Thank you,
Thank
Jeff.
you. Take care.
Thanks. Bye.